So my name is Andy Beedham. I don't think this goes to the first slide. I'm the chairman of the board. I've got here John, who is a founder and CEO, and and I've got Rob Smith, who is our new CFO. Two other people on the board are both aerospace experts as well, Annette and Rothwell and David Bailey. And the board is built from an aerospace experience and finance and commercial experience. And we received a very important investment from Amati and a couple of other long-term VCT investors last year, as David alluded to. Through COVID, it was very difficult for aerospace. We invested very heavily in our technology and services. We've been fortunate now to start winning some large contracts in the States, and based on contracted revenue, for example, this year we're at 27 million we're targeting for end of October. That's based on contracted revenue. Last year about 16.8. So you can see that sort of growth, the need for investment, and we're just in a year now where we're turning into a profit in the second half of this year based on that level of sales. And that's really why we're here today. Is it's so important for companies like ourselves to be able to tap the market for growth investment, which is shown out in the numbers, at the right time to be able to contract then and grow the business. And it's been a very valuable experience for us. The other thing maybe to point out with ourselves is we're in engineering services in an industry which is actually growing quite rapidly, which is the use of composites in aerospace. And when you therefore think about ourselves as part of the industrial base and what this country really needs, and one of the values and purposes which we're discussing about the aim and everything else, we feel we meet all those criteria. So I'm going to pass you over to John, who is both the founder of the business and a composites aerospace engineering expert, and devised a lot of the services and technology which we now are able to commercialise.
Thanks, Andy. So, good afternoon, everyone. Just following up from what Andy said there, who we are, what we do. Clearly, as the name suggests, we're in the composites industry, and a composite material really is a combination of two materials brought together to give you performance superior to the individual parts. And in our world, that is mainly fibre-reinforced polymers for lightweighting of flying aircraft. As you can see there on the image, what's driving this is the change from pretty much aluminium aircraft to composite aircraft. Firstly in defence, secondly on twin aisle, like that 787 there, but eventually as those platforms are updated on single aisle as well. And really, why do we exist? We exist because at the front end of that process, a lot of effort for our customers to get the materials into the form of use. These aren't, metals, they're not homogeneous, they're not set and you're machining them. These are live materials, if you like. It's the resin, the fibre pre-impregnated with the resin. And so there's a lot of controls, a lot of effort, a lot of skills and technology to bring that together into the form of use for our customers in the most efficient way. And what do our customers see? They see, at least a 10% material reduction, and that is material that would have otherwise gone into the bin or recycling or recovery in some way. And it's about getting as much of those raw materials onto the aircraft in the first place. And we'll come on to how we do that in a moment. And what's driving this is, a significant growth in air travel over the next sort of 20, 30 years. But even in the short term, 15 years, we've seen 10 times growth in the use of composites needed for aircraft. And that's driven by the change, as we talked about, to composites, but also the fleet size is going to double as well. And for anyone who likes data and stats, both Airbus and Boeing do an absolute stat fest of report every year with pages and pages of how they make up their market forecasts and the information. So that's what we do. That's what the industry is focused on. And as Andy said, we're growing with a significant pipeline. And we're experts in IT as well. Is there anything I should point it at?
It was working for me.
There we go. Not sure I made that change, but so, as I say, why do we exist? So the raw material, unlike metals, comes on rolls, and it's essentially a roll of sticky fabric. And those fibres are very discrete, so they're specified. They vary depending on the program, the performance required. Mostly carbon, but also glass fibres. They're woven into a pattern to give the strength and performance where it's needed in the structure. As I said, that's also pre-impregnated with the resin system, uncured. So it's lifed, it needs to be controlled, it needs to be kept clean, stored correctly. We store those in freezers, until they're ready for use. And this is really I didn't touch that one. This is really the challenge of the industry, is that material is, I won't say difficult, but it needs managing correctly. And our customers, before we came along, have to do all this themselves in a suboptimal way, because they're focused on making parts and the clever stuff, and not necessarily the sort of front-end science behind getting all these materials into the form of use in a really efficient way. So what do? We buy the materials on behalf of the customers. We cut very discrete and controlled shapes out of there, keeping batch traceability, keeping live traceability, and building that into the data systems that go with the kits. And we do it in an efficient way to really drive yield. So it's a very complex version of making cakes in terms of cookie cutters and making sure you get as much of the pastry out of it as possible, but obviously using very expensive and very controlled materials. And what we deliver as a product to our customers are those kits. So there's the structural product, so they're the actual plies that our customers will use to make the part. In this case, 2 materials, packaged in the form of use, in the order of use, ready to go and interface with our customers' processes. But we also do the vacuum bag product, and they're materials that are used in the curing of these finished parts. And what you can see there are the 2 kits required to make 1 part on 1 aerostructure. That's about a 1 metre diameter firewall for an aero engine product. So what our customers can focus on is all that clever stuff in terms of making the parts, and they need to make more parts, and they need to make them for less cost and less waste. And we can manage all that upfront supply chain, get it into the form of use, manage the long lead times of these materials, manage all the material suppliers, and use a lot of digital technology to drive efficiency and drive productivity. And so, often the sort of challenge in explaining what we do is we don't make materials. The material suppliers already exist out there. They're long established. They're big multinational organizations, and their materials are approved on these big aerostructure programs all around the world. Very global in its nature. There's no regionality to it. These are global material suppliers with the specifications around the raw material on the roll. And then we have the end users, the people who actually make the aero component or even the full aircraft, who need to buy those materials, get them into the form of use, and do what they need to do. What we offer is we'll manage that material supply chain, we'll get the products into the form of use, scheduled correctly, and so they're all the activities that we get involved in and use our digital technology and processes to drive efficiency from. So yeah, we need to buy the inventory, and they're expensive materials on long lead times, so the technology can drive efficiencies there. It reduces a lot of cost. Manage that inventory when it arrives on our facilities, store it in the freezers, track life, track batch traceability. Manage our customers' demand. Heaven forbid they do change their mind occasionally in terms of exact scheduling of when they want those parts, so it's managing that short-term demand against the long-term material supply chain. And then only then do we get to actually make the kits and get those kits into our customers and interface with their production lines. And the benefit for us is, because these are single source material suppliers, it's all flow down material pricing. Despite how that graphic looks, we're not squeezed between these 2 organizations or 2 groups of organizations. Everyone has to buy the correct material for the correct price globally. It's all controlled by the primes because it is single source. So material-wise, the only driver really to take cost out of that process is to use it more efficiently. There's no benefit of buying more or trying to buy any different price. It's all fixed and controlled, so it's all about using it correctly. And this is the technology we've developed to manage that. So yes, there's a lot of technology in the kit manufacturing itself. This is in one of our clean rooms in one of our facilities, but they're all identical and they all operate to the same processes, approvals and standards. But it is also about managing that order book, that demand signal from customers, that long-term demand signal, and ordering that material correctly in the correct quantities, balancing that off, getting it in, making the kits, and getting those kits to the customers with all that compliance and traceability built in. And I think, we talked, I think Andy mentioned it earlier about, disruption through COVID. What we used for that time is to use that time to develop our technology further. Whilst we were sort of confined to the UK, if you like, to actually take all the good process we'd done up until that point and digitize it into that one VRP system, which is our proprietary technology. And what's driving all this, clearly, what's driving it is sustainability and growth. So, there is a demand for air travel, but it needs to be more efficient. There is that push and race to net zero, and so the aircraft need to be more efficient. Currently they're using, fossil fuels. There's the introduction of sustainable aviation fuel, hydrogen power, electric power. The whole mix is going to change going forward, as it is for a lot of industries. But all those need a very lightweight, high-performance airframe, and they need the performances that composites bring to drive that. And that's not my opinion. That's already built into the forward-looking forecasts of the likes of Airbus and Boeing going forward. So, as we say, the use of composites is going to see a 10 times growth as the fleet size doubles and the number of high-efficiency aircraft are built, just to satisfy existing orders. But then there is going to be the need, as we move to alternative propulsion, to be more efficient as well within that those airframes. So a lot of public data. We're already on the journey. It's not something that may happen. We're already striving to it. And we provide a lot of data in what we do because we've digitized it to show our customers how much we've saved, how much carbon we've offset, how much material that we've made, actually utilized to get onto the airframe and save those unnecessary waste. As Andy said, we do benefit from a very experienced board. Andy himself has got a lot of experience both in public companies but also in materials technology businesses, something which brings a lot of benefit in terms of the oversight within the board. Rob, who's here, has joined us recently, but again brings a lot of AIM-listed businesses and public company experience in order to underpin the financials in what we do. And as Andy said earlier, both Annette and David, our other non-execs, are both industry experts in their field and bring a lot of additional benefits as well as the usual NED oversight. And so that's what we do and how we do it and what's our focus as we look forward. So as Andy said, our revenues for this year, 27 million. We'll be announcing our interims in a few weeks. But essentially due to our recent market updates, we're on track to deliver that and deliver that growth seen from previous years. As we said, there is growth in the UK programs and European programs, but also the US project with our launch customer and beyond, which will be driving growth over the next few years. We have people are keen to see an update on where we are in terms of that project, and as we announced recently, that final OEM approval to do what we do has been granted for that project by GE Aerospace for the GE programs at that customer, which allows us to complete that and deliver it as scheduled. Within the industry, clearly there's a lot of noise and news about Boeing and the challenges that they faced from their quality issues. We did have some, well, certainly there's no Boeing business in our forecasted numbers. We did have some and still have some Boeing programs within our business development activities. That, that's paused, but it's not going to go away. That'll still get pursued. So our driver really is to focus on non-Boeing programs until those issues are resolved. But again, it's expected to be a short-term issue until they're worked through. But we do have a significant pipeline, and I think the next slides cover those in a bit more detail. So our current contracted business, as we say this year, 27 million, and that becomes 33 million next year just by full rate effect, plus any new business. Our 3 facilities in Burnley, Fareham and Alabama can support 67 million circa of business without any additional investment. or minor investment on, just, people and minor equipment, but that's the sort of scale that the existing facilities can deliver. And we're working on pipelines with various customers and potential customers of around 200 million of business as well. So it's a big industry, lots of opportunity now as well as customers come through COVID. All the production rates are ramping up, both in civil and defence, and they look to be more efficient and do things in a smarter way. So there you can see our 2 UK sites and the customers and potential customers that they serve. A lot of work with the normal UK customers like GKN, Safran, BA Systems, Spirit, and GE in Hamble. It was GE in Hamble, now Enova. And because of that, as we said, what we want to do is use those relationships we've developed to push into continental Europe. So GKN, as you can see, and Safran have significant sites on the continent near the port. We can use our UK facilities to engage with those and build some new business with those. And then in North America, our facility in Alabama is fairly well sited with some key customers around it. Clearly, the launch customer is sizable, and we're focusing on that. But also from a new business point of view, there are opportunities relatively close by in terms of in the US, but also very, as I say, it's a very global industry. The needs are the same, customers, suppliers are the same, and the aim from us is to grow that facility with other customers in the locality. So just to conclude, I think I'm not too far off time-wise, but revenues for this year is all contracted business, and I say we've announced it's on track, and we'll be updating the market shortly on the half year. Chunky pipeline driven by large customers, particularly with access in North America, where customers are naturally larger and they have a good mix across civil and defence platforms. With that scale allows us, obviously to return on those investments that we've made and move back into profitability as those programs are delivered. And with the program in the US, that transfer project, that FAI project, is well underway. And as you can see, we've got 90% of this year's demand already through that project, which equates to about 77 of next year. So we're pretty long way through that now, as we look to transfer all that customer business from their site to ours. We've got a 5-year target to really use the investments we've made and the relationships we have to drive 100 million sales with a 10% EBITDA. And we feel, because of the constraints on the industry and their look to be more efficient and the sustainability requirements that we're all having to work under, we're very uniquely placed to use that technology and use the investments we've already made to make those transitions from customers doing this non-value add activity in-house and outsourcing to us, where we can do it in a much more focused and sort of waste-reduced way. And then finally, really just a summary of our journey with Amati. As David said, we've worked with each other and had the support of Amati since 2017 on our IPO. We find, again, Amati very focused and supportive in terms of the investor roadshows that we do, and only too pleased to join them on their investor events. Questions are always very, very insightful and very useful for us to get that different perspective in terms of the business, where we've come from and where we're going to in terms of that longer term approach, which is a very long-term industry that we work in. Very constructive where it needs to be. Very good, strong, well-received feedback and advice, particularly through our recent funding activities last year. And we find Amati a very long-term supportive investor as we face the challenges of, unique challenges, I guess, of COVID, but also face the opportunities in front of us as we expand beyond the UK in a very large and opportunistic industry.
Okay. Questions?
That's I think are we on time? Yeah, good.
We've got an opportunity for any quick questions, and we're also going to mingle with the coffee.
Thank you. Multiple suppliers, multiple customers, and yourself, but who are your competitors and where are they in their business development journey compared to where you are?
Right, that's a fantastic question. They're not really a competitor of what we do. You can outsource the cutting process that you saw in that, but there's no one showing, look, here's an engineering solution from managing the supply chain, all these multiple suppliers, and also focusing on that just-in-time service and helping those big manufacturers to achieve efficiency. And so that's how we've positioned ourselves as very unique. And we would expect to be successful, and I'd expect in any market where you're successful to someone else to say, well, we'll do that as well. The beauty of this and the moat is all the approvals and the time it takes to get to market. So it's more likely what we're finding is, say, big distributors who in theory you might say, well, why don't they do this? Are actually more saying, how can we team up with you and we'll do the inventory finance for a Spirit or a GKN, and you provide what you're doing. So we're not seeing competition, it's merely a make versus buy solution. And obviously in that, we must make a decent return. More and more, I'm focusing the company on that return on capital, because we'll see a material flow through, which is just a price flow through. And our focus should be on the asset side, a return on capital, which I do believe we can achieve. Certainly by next year, start to prove we can achieve the 25% return.
Sorry, going forward, do you see any problems in... Sorry, going forward, do you see any problems in actually employing more staff, especially in places like Fareham, where you've got NATS and IBM, etc.
Mm-hmm.
There is a very little amount of people that may be interested in actually moving.
Mm-hmm. Yeah, it's a very, very good point, and certainly everyone's faced sort of recruitment challenges over the last couple of years. I think where we've had our biggest challenges in the Northwest, because the likes of BA Systems have just been hoovering everyone up who's ever walked past an aircraft or touched a piece of material. So that's been a challenge. So we've recruited some technical staff in Fareham to sort of increase that distance from the likely poachers. But yeah, the industry as a whole is not, creating enough engineers and technical people. So, we're lucky we've got quite a good long-term team who've been with us for a while and has helped create the system and are bought into the story and the long-term vision. Alabama as well, I think, it had its challenges, mainly from production staff point of view. There's obviously a very different cultural difference, shall we say. But again, using local teams, the customers close by as well, using their knowledge, we've managed to build a very good sort of process now for recruitment, training and utilising of people. But a lot of our know-how is built into the system, not our people. That's why we've digitised the system, because we don't want to rely on trained people to sort of deliver the service. We want the system and the processes to deliver the service, augmenting the people who are there, from their dexterity and their human control of a very mandated and process-driven service.
Aluminium is very recyclable, cheap recyclable. If you look at the whole life of the product, are the composites recyclable? And if you look at the whole life of the product, are they actually cheaper than aluminium?
It's again a good question, and now the volumes have increased a lot. Then there is more focus on the end of life. Some of the early composite platforms have reached end of life, and even our customers' product that you saw there will be offcuts that need to be recycled there. So there are a few organisations starting to come through from researchers, universities, where they're looking at a full recycling process for the cured product, which is mainly about removing the resin and reusing the fibres. But our mantra is very clear: is let's not create as much waste to start with. Let's make sure it goes on the aircraft and then deal with the sort of 30-year life of the product when the technology's caught up to be able to recover, the fibres from the structure.
It's a key thing we exist. Minimise completely the waste, because you're right, aluminium, and I've been in that industry as well, and magnesium and titanium, you can have offcuts and just recycle, and a closed loop environmental sustainability. Can't do that in carbon fibre, so that has to be treated like gold. It cannot be wasted. It can be used on other sources, but they're not the same value. So it's one of the key reasons what we push our service as minimal loss of material. Okay, thanks.
Thank you very much indeed.
Thanks.
Peter, very nice to see you. Nick, welcome. So, it gives me great pleasure to introduce our second company for the afternoon presentation. And this is Diaceutics. And to present the company, we have Peter Keeling, who's the Chief Executive, and Nick Roberts, the Chief Financial Officer. So, thank you very much.
Thank you indeed, Paul. I met Paul back in his office in Edinburgh in 2019 when we were pitching the business. I'm sure he wondered why we spent the first 10 minutes talking about violins, because I was trying to impress upon him that my father was a concert violinist like he was. But really what I was pitching back then was to raise funds to create a digital transformation of a business that we had grown at that stage for about 10 or 12 years. A business that really is focused today on finding patients for the pharmaceutical industry, and specifically for precision medicine or targeted drugs. And I'll speak to some of those in a second. And back then, what we, in essence, the hypothesis was that we had a sufficient view of the total available market to say that were we able to digitally transform the business that we had then by expanding a lab network globally. So we are now today of over 1,000 labs plugged into our platform, that we could hoover up data primarily from the US, now non-US markets, data which is coming directly from those labs. We started out getting that data 6 months old, then it was 3 months old, then it was 1 month old. Today it's a day old data coming into our system, and I'll show you in a second how we use that. And lastly, to really create a digital experience and user interface with the leading pharmaceutical companies who are very demanding, are looking for a high level of service. And in essence, what we've done over the past years with the funds that Amati and others have put into the company is pretty much stick to the script of delivering and building the platform and commercializing that platform. I'm pleased to say that really between 2019 and probably 2022, 2023, we were endeavoring to put all of these components together and make them hum. In the last year, 2023, and particularly this year, it's been very much about commercializing that and driving traction. And I'm joined today by Nick Roberts, our CFO, and Nick will come in at the end and talk a little bit about some of the financials that are underpinning the progress that we're making. I'd like to stand back for a second and talk about precision medicine. And many of you probably already know this. But in many ways, the essence of this is a journey that touches, I'm pretty sure, everybody in this room. And if I think of this in the journey of cancer, every one of us, I think, either know or family member who is suffering from cancer. And today, cancer as a range of diseases are being transformed by the pharmaceutical industry by providing drugs that are targeting specific genetic aberrations in our cancer. So no longer is breast cancer one big disease. In fact, it's a whole series of subset disease No longer is lung cancer one large amorphous disease. It's actually a whole series of diseases. And by defining the disease in that way and targeting the drugs at that, you have a very, very specific and a much better response. So the success that many of our family members and others are achieving because we've been able to find very specific genetic aberrations in one system. And precision medicine today is not just a niche where I think it started 30 years ago. Some 40–50% of all of the pharmaceutical industry pipelines are now being transformed to products which work in very specific patient groups. This does three things for the pharmaceutical industry. One, it gives them a higher level of success, which means they can get products through the FDA much, much quicker, on average 4 years faster. Two, they're able to have pricing negotiations in a way that really funds those drugs. Some of them are very expensive, but because you're finding the patients that they will really work on. So pharma's being really supported there. And thirdly, from an investment standpoint, as AstraZeneca is an example here in the UK, where some 95% of AstraZeneca's pipeline is moving towards precision medicine. It's the reason it's a darling of the industry across the globe is because they have committed to making sure that their drugs tomorrow are going to work precisely in patients. So we are presiding over a transformation in healthcare, and it starts in oncology, but it's not just there. It's in Alzheimer's, it's in cardiovascular disease. So where do we come into that? There's a big problem in the industry. In fact, as more and more of these drugs are coming to the market, there's more of an onus on finding those patients, diagnosing them the right way. And whilst the drug investment, the investment in new drugs has been 30 years in the making, the investment in the diagnostic pathways for many of those patients is much further behind. And as a result of that, and we've evidenced this recently, is up to 64–65% of patients are not getting access to these drugs. So the drugs work, they're the right patients, but the patients aren't getting onto the drugs because you can't find them. You can't find them on their diagnostic journey. And again, go back to that personal example that we will all have had. Think about the patients in our own family and think of why was it months before they got another test? Why was it years before they got a diagnosis? That's not just a situation for us as individuals, it's actually a problem for the industry. And what we did in Diaceutics was to identify very early on that if we could solve for that one issue, find those patients for pharma and convert them onto drug, then we would transform the industry. And what we've built today, again with the support of the funding that you and others have given us, is a business which is pretty much stuck to the knitting. And the data that we're bringing on board and the way they're managing that data through machine learning and AI is we are finding patients today that yesterday in the United States were identified with a particular disease. Now that is a huge thing. It's taken a lot of work to put that together, but that's how polished this is. We are bringing that data to our pharmaceutical clients. They are transferring that information pretty much to the iPhones and the iPads of their pharma reps, and then are able to approach a doctor, not at a random, hey doctor, you might see a patient in the future that has this disease, but doctor, we understand that you may have patients in the near future who are suffering from this condition. This is the right drug. So all of a sudden, we have created a commercial opportunity for the pharmaceutical industry to find those patients. The best way to give an example of that, is to actually give you an example. And I want to jump, these slides are in your QR code. So here's a customer that we started with way back in 2023. This is actually a relatively small biotech. And they launched a drug in lung cancer, which, an exciting drug, a lot of brouhaha over the launch of this drug. And the drug works in a very, very specific set of lung cancer patients with a genetic aberration called EGFR exon 18. Doesn't roll off the tongue easily. But there are roughly, let's say, 7,000 or 8,000 patients in the United States for whom this is a relevant drug. For those patients, it's transformative. It saves their lives. It certainly prolongs their lives. Might not save their lives, but certainly prolongs their lives. And when we met this company way back in, it's actually almost at the beginning of 2023, they had already launched the drug, and these little bar charts represent how many patients they were converting onto drug weekly. okay? So you can see these are relatively small numbers. Now remember, this drug is in the region of a $300,000 to $400,000 drug. So for them, it's small numbers, but very large return. And as we started to dialogue with this particular company all the way through to week 26, we said, look, we think we can find more patients in our data that we can convert onto your drug. I have to say they were initially very skeptical, and the reason they were skeptical is because they felt that the diagnostic system was sufficiently efficient already. And what we did was actually we switched on what was a sample, literally, let's show you what we can do. And you can see what happened. In essence, we were doubling the number of patients that they were converting onto drug. And there was a little bit of, dare I say, shock and awe going on here in the senior leadership of this company, because they had built their forecasts pretty much on the blue lines that you see above, and all of a sudden they were starting to convert more patients onto that. So the power of the data, the power of being able to extract that data, analyze it, and convert it within hours and put it into the hands of the pharma reps, was to actually change patients' lives. Now, we don't know what happened to the 46 patients in week, whatever it was, 44. But we're pretty sure what we did do was to give them a very, very different opportunity at going on to a drug that changed their life. So this is an example of what we've done. We are working today with almost 50 different pharma companies with over 63 therapy brands. This is what we're doing for each of them. And beyond that, we're adding lots of other ways in which we can improve the efficiency of testing that makes these bar charts even bigger. I wanted to go to, just jump back to a little bit of the sort of the scale of, where are we here? Sorry, just come back to the sort of the fundamentals of how we do this. So I talked about a lab network. Why is a lab network important? And it's a huge differentiator for us in Diaceutics. What we've done, in essence, is bravely reach out to what is a very, very fragmented stakeholder group right across the globe. These are labs, the labs that are existing in the hospitals that are near all of us as individuals. These are labs who are sitting at the front line of medicine, sitting at the front line of precision medicine. And we've in essence said to them, if you can share the data with us in a way that's compliant, in a way that fits your particular business model, we will make sure that you are well informed. We'll make sure that we are bringing you in on the inside of new tests that are coming down the line, new ways in which you can enhance testing and improve your efficiencies, what we call a value for value model. And building that lab network, in many ways, has been a labor of love. But what it has done is provide us with 1,000 shovel-ready labs who are ready to roll out new tests. So no longer are we going to our pharma customers and saying, you should build a lab network that will launch this new test. We're walking in and saying, we are ready to roll out the new test that will support your drug. So that lab network's hugely important to us. Our data. So what we've done over almost 15 years is to collate, analyze, integrate, and add AI to those data sets. These are insurance data sets, they're lab data sets, they're epidemiological data sets. Everybody, and I'm pretty sure there'll be people in this room who are invested in other data companies, data is messy. It's hugely messy. And when it comes out of the hands of healthcare providers, it's exceedingly messy. But what you can do with that information is bring it together, integrate it, and turn it around into actionable insights, and those actionable insights save patients' lives. So the data sets that we have today, we believe, are the largest, deepest, most integrated, and certainly the ones that are delivering the greatest insights to the pharmaceutical industry. I'm pretty sure I can say that because the products that we're providing are pretty unique in the pharmaceutical industry, and has driven a lot of the growth that we've seen that Nick will talk to in a second. And finally, the platform. The platform, in many ways, is the sort of the moment when all of this comes together. What we're trying to do with the platform is to really reduce the cost of commercializing these drugs. Typically, one would put 100 reps on the promotion of a new drug. But ultimately, what we believe is we can do that much more efficiently, using the lab and the data to find those patients and help the pharmaceutical companies save money. So the dual proposition here is find more patients, save half the cost of doing that. that is what is driving the business growth. Nick, do you want to cover some of the financials?
Yeah, thank you, Peter. Thank you, nice to meet you all. I'm just going to skip through. As Peter said, these slides are all available. We're not talking to all of them, but they obviously tell a fuller story. I just wanted to jump to the financial strengths here. Really, since IPO and then our follow-on raise in 2020, Amati and others have enabled us to build the business we are today. So Peter talked about the lab network. Just to be clear, not labs that we own, but we partner with and have relationships with so that we can pull their data. That data is de-identified and unique to us, and we curate that. We use artificial intelligence to do the work that historically very clever people in Diaceutics have been doing. Now they are building a large language library which takes their knowledge and allows us to compute millions of more lines of data than they would be able to, but statistically at the same level of accuracy. And that data is then through our platform fed to our customers. And really the funds that we've raised have, to this date, have allowed us to do that. So let me just talk to where we are now financially and where we will be in the future. So we are a high margin business. So our gross profit margins in 2023 were 83%. And we see them being around the 85% plus or minus 1 or 2 percentage points on an ongoing basis. That is because we are a platform-led, a tech business, and therefore we expect to have high margins and ultimately high levels of profitability as we move to maturity. Today we have a 3-year revenue CAGR of 23%, and consensus guidance in the market has us growing at around about 25% year on year. I think probably more important from the business we've come from, which was very consulting-led, to where we are now being tech and to a greater extent subscription to data-led. 52% of our revenues are now recurring in nature. So that is a subscription contract with a recurring element to it, so it renews year on year. And that has helped us build more certainty around our future cash flows and more visibility in terms of our order book. So not on here, but our order book as at the end of 2023 was 26.5 million and was up some 57% on the year before. That visibility, that multi-year visibility, so that goes out 2024 and future years, gives us more certainty around our growth forecasts and our ability to support our customers. We now have 6 customers, which we call enterprise-wide. These are 6 of the biggest pharma customers. I can name one of them. It's Pfizer. The other 5 are household names. We work with 17 of the world's top 20 pharma customers, plus another 30 or so smaller pharmaceutical and biotech customers. By enterprise-wide, we mean that we are working with them across multiple drug assets, brands within their portfolio. As an example, AstraZeneca has, I think, somewhere approaching 100 different assets in its portfolio. We work with a majority of their oncology drugs. And that is one of the proof points for our go-to-market strategy, being able to not necessarily add more and more customers. We have very good blue-chip customers, but to expand the number of brands, the number of teams we work with within those customers. And finally, just to say, we have thankfully, to the fundraisers we've done in the past, a strong balance sheet, 16.7 million of cash as at the end of 2023, and no debt. That is adequate funding to be able to deliver on all of our organic growth forecasts. Finally, I'll just add one thing. As a business from 2025 and going forward, we will be back profitable at a profit before tax level. We are EBITDA profitable at the moment, but all the way down the P&L, even at the bottom, we'll be back profitable in 2025 and cash flow generative. And I think that's really important to articulate to all of our investors, as that's a key, again, inflection point for the business. I'd say one final thing before questions, and that is we were Very proud to hold a capital market event yesterday afternoon. That was held with Pfizer, one of our customers, talking, and KPMG, who we have a strategic alliance with. That recording will be available on our website from, if not this afternoon, tomorrow. Please, could I encourage you to go and check that out? Thank you.
I think we're happy to take any questions.
Thank you. All very interesting and obviously doing very well. I contrast that, though, with the state of patient data in the National Health Service. Now, I'm reasonably forward. I have the NHS app. I've got over 150 items on it, covering 3 probably major serious issues, now thankfully under control. But I would doubt your ability to be able to run a system that detected what the issues that I have from the state of the records. They are pretty poor.
Yeah, it's actually, comment on that, a couple of things. It's actually not dissimilar to the poor records that exist anywhere else. Geisinger Health System, just outside New York, when we looked at their healthcare records, half of them were just handwritten and PDF notes, very hard to extract digitally information from that. But we've conquered that. Specifically in the NHS, I think, without a doubt, the NHS has been on a journey from the promise of we'll open up the data sets to allow you to have them, to actually delivering on that has been really hard. I'm delighted to say that we've been working with one of the largest trusts in the UK, in the home counties, to really work with them on how we do that, to really understand what's in their records, how do we transfer that information to us in a safe way, how do we do it in a compliant way, and to try and make sense of all that sort of disparate and disconnected data sets. Now, this particular trust, it has the advantage of having a lot of community health and hospital health pretty close at hand. But I think we're learning on the job there. And actually, our UK data sets are now starting to be, at least in this one region, pretty strong. What we're doing with that, together with the trust sponsor, is to trying to show how we've conquered some of those challenges and roll that out elsewhere. But it is a journey. Honestly, if we can even take segments of this and capture particular diseases, I think it's about leading examples and role models of how that data can be used elsewhere. One of my biggest beefs, I'm from Northern Ireland. I can't get hold of Northern Ireland's healthcare data, but I'm not going to let go of it until we can try and do it. And if I can't get the 1.2 million patients that live within 30 odd miles of me, but it's about, kind of going headlong and trying those challenges. In the US, France, Germany, Italy, different challenges in different ways. It's all a struggle. It takes about a year from start to get that data supply. Good news is that's a pretty big barrier to entry for others, because they have to build those relationships. The bad news is that you have to have a team dedicated to doing that, and that's what we've done. Yeah. I don't know if I've answered that question adequately, but maybe not reassured you, but we're on it.
Might come back for supplementary if there's
I'm sorry, I'm a bit slow here, but can you explain to me how you fit in with things like Watson and Gallery?
Yeah, so Gallery is specifically a diagnostic test, okay? So it will be run by a laboratory, probably a central laboratory, and they will run a blood test on that, a blood sample through that, and they will come up with a test result. That test result is then fed to the physician. We do not do the testing, okay? We are working with the lab that has run the Gallery test and saying, you're running the Gallery test, but you're also running 17 other versions of other tests. Can we bring all of that data back in, and so that we can really map out not just the one test answer from Gallery, but all the different tests that patient may have had over their, could be 4 years of a journey in lung cancer. And by seeing those 4 years of a journey, we can find patterns. We can even predict patients that are going to go on to have a subsequent cancer diagnosis. So Gallery is a really valuable component, but it's one component in an entire journey. What we're trying to do is to map the entire patient journey. Watson is it's an experiment in trying to bring lots of that together to be predictive of disease. It may succeed, I don't know. There's always debate about whether Watson is going to succeed. I don't know. I'm not close enough to it. But that's the difference with Gallery.
Hello. Yeah, I think you've done very well. You've built an excellent platform, and the future could potentially look very bright for you. I was wondering what your greatest fear for the company might be.
Well, nobody's asked me about competition. Competition, so I'll very quickly say, a bit like the previous speakers, our competition is not really a joined up single competitor that we can point at. Sometimes that's a bad thing because you feel like you're people nibbling away at your business. Our biggest competitor is the speed at which the pharmaceutical industry opens its purse to really spend on testing. Pharma companies have always thought of their business as develop a drug, commercialize a drug. What we're saying to them is, you need to commercialize the test that goes on with the drug. And one of the pictures that I used to show early on to the pharma companies, that don't allow me to show it anymore because we've got slicker, was a car. It was like a Chevy sitting up on blocks with no tires on it. And I would say, as a pharmaceutical company, you're selling the car without the tires, because in precision medicine, you're going to need the tires. You're going to need to test people to make sure that that car runs. And actually, that little graphic dropped home in a lot of our pharma customers. So my biggest fear is that the speed at which some of our pharma customers are gathering a knowledge that they really need to invest outside their traditional business model to make sure that testing is right. For some like AstraZeneca, for Pfizer, increasingly for Glaxo, they get it. They're putting teams in place, they're putting budgets in place. For others, we're literally at the beginning of the journey with them. So what's my biggest fear is the speed at which those companies can catch up, because ultimately, patients are literally missing out. I mean, 60, 70% of patients are not getting access to these drugs. So it's a little bit of a passion fear, but it's also a bit of a commercial fear at the speed at which those pharma companies can change. And our alliance with KPMG and our investment in marketing is all about trying to knock that on the head. You need to do more. You have to come with us on this journey if you want these drugs to be into the right patients. Sorry.
Peter and Nick, thank you so much for that fascinating insight into your business.
Thank you very much.
Thank you.